Raising interest rates, a slower housing market, cost of living pressures squeezing buyers from every direction. If you've been looking at becoming a mortgage broker or already in your first couple of years, you probably asked yourself whether the money is still actually there. And it is a very fair question because on the surface, the conditions of the last few years don't look great for commission-based professions built on people actually borrowing money. But here's what the surface doesn't actually show you. The brokers I know who are structured, focused, and clear on what they're building, they're having some of the best years they've ever had. Not despite the market, but actually because of it. And in this video, I'm going to show you exactly why, what mortgage brokers are actually earning in the UK, and what separates the ones who are earning 30,000 a year from the ones who are earning well over 100. Now, by the end of this, you're going to have a realistic picture of what mortgage broker income looks like at different stages. The first year, the building phase, and when things are properly established. You'll also understand exactly what drives the income gap between the brokers in the same market, and you'll leave with a clear idea of what to focus on if you want to be at the top end of that range. So let's start with the real numbers, because vague ranges don't actually help anybody make a decision. You see a new broker in their first year, self-employed, building from scratch, they typically earn anywhere around, and this is obviously going to be roughly anywhere between 15 and 30,000 pounds. Some months will be good, some might be quiet, but the pipeline takes time to build and the income reflects that, okay? And that's not the reason to walk away. Please understand that. It's definitely not. It's just the honest starting point of this career as a self-employed advisor, I must point out. Now, by year 2 and 3, with a consistent process and a growing referral base, that number typically moves to somewhere between 40 to 70,000. And at this stage, this is where the compounding starts to kick in. Past clients are now remortgaging and referrals are coming in from people who you helped 12, 18 months ago. The work you did early on starts paying you again and again, which is great. A broker who is properly established, strong referral network, clear positioning, a structured client journey, and consistent visibility, they can earn well over £100,000 a year, well over that. Some earn significantly more in some cases. And this isn't, by the way, exceptional. It's just what the career looks like when you've built it properly over time. Now, the range is really wide, £15,000 to £150,000. That is the same industry, the same qualification, the same products. What explains the gap has nothing to do with luck or connection or the postcode you work in. It comes down to three things. The first thing is how you get paid. Most mortgage brokers earn through a combination of a broker fee charged directly to the client and a procuration fee paid by the lender when the mortgage completes. Understanding both of these and structuring them confidently is the very first step to beginning to be getting paid properly for your work. The brokers at the lower end of this income range are almost always undercharging. They're nervous about their fees, they apologize for it, they discount it, they waive it for difficult clients, and every time they do that, they're not just losing their fee, they're actually training themselves and their clients to see their time as low value. Your fee is not an obstacle, it's a signal of confidence. Clients who question your fee and then work with you anyway, and most of them will, they quickly forget what they paid and they remember how well you looked after them. The second driver is protection. This is the one that makes the biggest difference to income and one that most new brokers are really uncomfortable with. Life insurance, critical illness cover, income protection, family income benefit. These are not add-ons, okay? They're a core part of your job. A client who takes a mortgage without adequate protection is significantly exposed. Your job is to make sure they understand that and make a conscious, informed decision about it. See, the brokers who consistently write protection alongside their mortgages earn materially more than those who don't. Not because they're selling harder, but because they're advising properly. And the income from protection isn't just the initial commission. A lot of it is reoccurring. That means that brokers with strong protection books are earning money every month from the work they did years ago. Now, this is the kind of income stability that makes the self-employed model genuinely attractive. And the third driver is repeat and referral business. And this is where broker income either compounds or stalls. You see, a mortgage is not a one-time transaction. A first-time buyer you help today will remortgage in 2 years' time. They'll probably move in 5 years' time, and they might go into buy-to-let if they want to. See, they have friends as well. They have families, they have colleagues who need mortgages too. One well-looked after client over the course of a career can be worth thousands and thousands of pounds in direct and referred business. See, the brokers who capture that value are the ones who stay in touch. They follow up after completion. They check in before the fixed rate ends. They make it completely frictionless for past clients to come back and send someone their way. This isn't complicated. It's a process, a simple sequence of touch points that keeps you front of mind without being annoying. The brokers who don't do this lose that business to whoever the client happens to speak to next. That lost repeat and referral business is the single biggest reason why brokers who work hard still end up with inconsistent income year after year after year. All right, now let's talk about the market, because higher interest rates, slower transactions, buyers sitting on the fence, Does that hurt the broker income itself? Here's the honest answer about this. Yes, in a very active market, low rates, high transaction volume, and buyers everywhere, it's going to be easier to generate cases. The phone rings more, inquiries are going to come in without much effort, and some brokers do very well simply by just being available when demand is high. But those are the same brokers who are often going to struggle when the market slows because their income was never actually built on anything structural. It was built on volume that the market had just effectively handed to them on a silver platter. And when that volume drops, so does the income. See, the brokers who hold their income through quieter periods, and some even grow it, a lot of my clients do, they're the ones who built on repeat business protection and relationship rather than pure transactional flow. A remortgage client doesn't care about what the market is doing. Their fixed rate is ending and they need advice. A client you looked after brilliantly 3 years ago is coming back regardless of what interest rates are. The business is yours and the market doesn't touch that. So the question isn't really whether the market is good right now. The question is whether you're building the kind of business that works in any market. And the answer to that entirely is in 100% your control. So what does this mean if you're just starting out right now? Well, if you're new and you're thinking about getting into this, here's what I want you to take away from the income picture. Year one will be slower than you want it to be. Plan for that. Don't let slow start convince you that the career doesn't work. It just means that the pipeline hasn't had enough time to actually build yet. Charge your fees with confidence from day one. Don't discount it. Don't apologize for it. The clients worth having will respect it. And then get comfortable with protection conversations early. Don't wait until you feel ready. You'll feel ready after you've had 10 of them and most of them went fine. And then look after every single client as if they are the most important referral you've ever had, because they are, okay? The income you're planting with every completed case is the income that comes back for you in years to come. If you stay in touch and you stay front of mind, the money is absolutely still there. The brokers earning well aren't doing anything exotic. They're just structured, consistent, and they are playing a longer game than most people are willing to play. Now, if you want to know how mortgage brokers are paid, the structural breakdown of what that looks like, I've done a deep dive video on that. You can check that out. I'll link it up on the screen right now.